You lay out a couple scenarios in this sort of ultimatum situation that the president has laid out, no enriched uranium, basically. Both scenarios seem to point to higher oil prices.
Right. I mean, the question is, will the White House find a way to reach a deal with Iran by walking back the zero enrichment demand? I mean, that is what has blocked any negotiations moving forward to a deal throughout both of his presidencies. So the big question is, are we any closer to a deal now than we were when this ceasefire started? And President Trump has been very, very good at moving market sentiment by saying Iran wants to come to the table. This war is going to end soon. But he has been saying this since the start of the war, and the market continues to believe it. Meanwhile, we continue to have the largest physical supply disruption in history. So at what point do market participants start to think about a longer duration war if he can't close the deal with Iran?
Basically, I mean, President Trump can either say, you know what, we're out of here, or he can amp it up, right? And both scenarios are not good ones. Which one would you position for?
I mean, again, if he says we're out of here, that leaves Iran in charge of essentially a toll booth, deciding who comes through the Strait of Hormuz or not. And that leads to a situation where we're not going to get a full return of barrels to the market. Now, we can try to escalate to try to reopen the strait. That's going to involve a significant surge of U.S. troops, potentially to the theater, an extended campaign. Or you can try to get a deal. And the challenge is, if we have to go forward with a blockade to try to change Iran's calculation, that could mean an additional 1.8 million barrels off the market because we'd be stopping all Iranian barrels from reaching key markets like China and India. But at the same time, Iran could respond by further retaliations against neighboring oil producers. So if he does not close the deal in terms of a negotiated reopening of the straits, you're either looking at the Tehran toll booth staying in operation or an escalation that leads to more supply outages in the Middle East. So I know the market wants to be optimistic that this is ending soon, but if he can't close the deal, if we can't sort of move the needle on the issue of enrichment, we have to brace for further escalation and further disruption.
Can you play out the game here in terms of blockading the strait and not allowing Iranian oil to reach China ahead of a high-stakes meeting with President Xi next month?
I mean, Eamon Javers laid this out just so well. I mean, the question is, are we really going to start interdicting ships bound for China? I mean, that raises the issue of a high-stakes confrontation between two superpowers. The other issue simply is, what does that mean to supply outage? I got to interview Fatih Birol today, IEA head, and he said currently we have 13...
Yeah, sorry to interrupt. We just want to show the Spider Rock advisors ringing the SIBO bell there for the end to trading, official trading in Chicago. That's a regular trading day for options, by the way. Helima, I'm sorry to interrupt. We were talking about China and pulling China into this whole thing.
Yes. I mean, the question is, if we pull China in, the question is, how many more barrels are going to be off the market? What does this mean for the status of our negotiations with China on a whole host of other economic issues? But again, Fatih Birol, IEA executive director, today said basically 13 million barrels are off the market currently. Are we prepared to add to that volume? That will be a key question. And last thing I'll say is around 80 energy facilities have apparently been damaged. And Fatih Birol said 1/3 are severely damaged and could take 2 years to come back to operation.
Do you think China would involve itself in the war at all in any way to make things worse? I mean, threatening their supply of oil, granted, they probably have a very good reserve still that they're working off of, so it doesn't really affect them quite yet. But eventually it will.
I mean, Melissa, this is a great question because we've always said that China exercised prudent risk management going into this war. They have been buying aggressively for the strategic stockpiles in advance of this conflict. They were the big buyer of the SPR release, remember the 400 million barrel coordinated IEA release. China was a big buyer and then put export restrictions in place. So China is really trying to preserve a stockpile to see through this conflict. The other question is, are they benefiting from the fact that the United States now has to move military assets that were in Asia for the potential defense of Taiwan to the Middle East? So, again, there are real questions about how much pain China is suffering, and are they getting some strategic advantage from this war?